Hey everybody, Boris. Welcome to the crosses section for April 24th to 28th of 2017. There's actually a couple of very interesting crosses setups this week. One really off the radar, and the other one is going to be prime territory as far as the election goes in France. So let's just start with what I have in mind as far as the commodity dollar crosses, and then we'll get to the election trade as well. On the COM dollar side, the Aussie Kiwi to me is quite interesting because the negative trade here continues to prevail with resistance at 108 and support at 106. We had a big move up a couple of days ago in the Aussie Kiwi to the upside, but it sort of failed. And I still like this very much as a sell trade. I'll show you on the charts exactly why. CAD Yen, another interesting trade here as a kind of a counter trade to my view that the dollar CAD really is going to top out at 136. The weak caddy trade, sort of if oil collapses further below 50, and we have more risk aversion trade, especially let's say with the French election looking much more positive towards Le Pen, all that creates a lot of turbulence in the world. And I think CAD Yen, which is essentially stuck at this 82 level, stuck around the 80.73 level, could break the support at 80, and a move down could be quite sharp. So this is kind of this is sort of again a negative French result election that could combine the oil forces along with it as a potential trade for the week. But the true election trade this week, I think, is going to be the euro pound trade, because that's been very much steady at this 82 level. Cable, as I said, had relative strength last week and could be seen as a safe harbor trade if the French populace votes for a much more Frexit-oriented candidate. So the idea here is that if we get a negative trade in the euro pound really has a chance to very quickly drop towards the 80 level after all of this very, very quiet consolidation around the 82. So let's just take a look. Actually, you know what? We'll start with the Aussie Kiwi. I don't want to go. We'll go to the last one as the reveal. The Aussie Kiwi, why I'm negative is because you have a continuous series of lower highs here. The move to the upside kind of got failed and reversed on Friday. We're still underneath this 108. As long as 108 doesn't get broken to the upside, the move down has some serious potential here. I still think there's more pressure to the downside than to the upside. It's a small but significant relative strength move towards the Kiwi. I kind of still like that as a sell. Now CAD Yen, as I said, is a kind of a combo trade on both lower oil and more risk-off capabilities. 80 is the hold here. That breaks to the downside. There's literally no support here, all the way down to 77.50. So quite a long way. And generally, this is pretty much a one-way trade to the downside as well. So it's a very low volatility expression of the dollar yen, and a break, as I said, lower. Even a break sort of towards 80.50 will be enough to kind of trigger, I think, a much lower trade here towards the 77s. And last but not least, here's the euro pound. This is the French election trade. We are holding steady at the 83.50 level, 83.72 level, and the break here, the lows here, what, 80, basically 83, right? Those are the lows here. Those will go by the wayside if we have a very, very negative election result out of France, and really 82 becomes the near-term support here as we go forward. So euro pound could be a very interesting, more or less lower volatility way of trading the euro trade as we go forward. That's how the week shapes up. I wish you guys the best of luck, the best of trading. Boris Lossberg, over and out.